Welcome back to FT Markets. We've had a deal this week on Iran's nuclear program. What will the impact be on energy markets, in particular on the oil price? With me to discuss this is Neil Hume, who's the FT's commodities editor. If we look at our first chart, we've seen the oil price jumping around this year, but it's basically back where we started.
Yeah, well, I mean, yesterday's reaction was a bit of a damp squib. Before the announcement was reached, there was lots of speculation amongst analysts that we could see as much as $5 off the price of oil if sanctions were lifted or if there was an agreement moving towards that. In the event yesterday, the price came off sort of $2.50, but then there was a very sharp rebound.
Why was that?
Well, because I think people looked at the agreement and said, first of all, there's no change to the amount of oil that Iran can export. It's staying at 1 million until a further agreement is reached. So 6 months, they'll continue with the sanctions. But then you sort of look through the small print and the fine detail of the document, and people were saying, hang on a minute here, does this really have any chance of getting through the US Congress? Are we really going to see a deal here? And are the things that the Iranians have offered to do, are they a flaw? Or are they a ceiling on what they're prepared to do? I think Congress will want more, and if that's the case, then this deal could collapse, possibly.
So what are the big drivers of oil prices at the moment then?
Well, I mean, for for Brent this year, as you can see, sort of,
chart,
yes, I mean, so the price came off. There's lots of, lots of people talking about the shale revolution in the States, oil coming out. But then we've sort of had a big snap sort of back rally, and what we've seen here is concerns about OPEC supply. So there's lots of supply offline at the moment. There's the problem in Libya, civil unrest, strikes, refineries being shut, pipelines being shut, civil unrest also in Iraq, there's crude theft in Nigeria, and the net result of this is Saudis having to be pumping at sort of more than 10 million barrels a day in order to make up for this lost supply. So it's quite a tight market. And
any beneficial impact from Iran is not really offsetting that?
No, not to any great degree, and there's also concerns now about Venezuela. There's a new sort of president there. There's potential for strikes affecting the state oil company there. So again, crude is a sort of tight market at the moment. On the one hand, we've got all these worries about OPEC supply being offline, and also at the same time, we've got this sort of shale story in the US.
What matters, of course, for the global economy and financial markets is whether we're going to see falls in the year to come that would help with economic growth, but also reduce inflation. Brent, as we can see, remains above 100. But if we look at our second chart, we have WTI crude price. Perhaps you just very quickly explain the difference between WTI prices and Brent?
So this is the US benchmark.
Okay.
It's the US oil price as opposed to Brent, which is the global benchmark.
Yeah.
So this directly reflects what's been happening in the US oil market. So as the shale revolution has taken off, this shows you what's been happening.
Okay, and what have we seen? We've seen a turning point, do you think?
Well, yeah, certainly as production has ramped up and the US looks as it's importing less and less oil, it's becoming a major exporter of oil products. We've seen the WTI price come off quite sharply. Now, there are some people that think it could head back to the sort of level that we've seen during the, well, perhaps not quite as far, but during the financial crisis. Others say that that won't happen, but there is an increasing amount of oil coming, but the question is, can it get out of the US?
All right, John, what are the factors that are going to take it down decisively back to where we were in 2010 or even earlier?
Well, I mean, it is really about the bottlenecks. I think if that oil continues to pile up in storage facilities in the US and it can't get out, I mean, there is a ban on crude exports from the US, although you can export products such as diesel and sort of refined things like that. So if this continues to back up and the supply continues to come in, then there's every reason to think that the price might go lower.
And to put it back in context, the deal in Iran, does that change that picture?
Not particularly for the US, really. I mean, as I said earlier, this is a US price. I mean, it will have some impact, of course, but I mean, really, that has more of an effect on Brent.
Neil, thank you very much. So, limited impact so far from the nuclear deal. What we have to watch, of course, is whether there's a broader deal in Washington that opens up the markets, and also those pipeline constraints in the US.